Dr. Babasaheb Ambedkar Open University.
Hello, my dear friends and students. Welcome to Dr. Babasaheb Ambedkar Open University, Ahmedabad. In Chaitanya studio of Dr. Babasaheb Ambedkar Open University, Ahmedabad, in the video series lecture of BBA program, BBA regular management accounting paper number 602, block number 2, unit number 1, that is cash flow statement, Indian Accounting Standard 7. With the discussion of the previous session, or we can say the previous lecture, let us continue the today's session with the differentiating and defining some another steps, that is steps in a statement of cash flow and with respect to the practical examples. With that, my dear friends, the statement of cash flow contain the information about the flow of a cash in and out of a firm with the usage to which the cash is put. So in that we can say that there is the statement with respect to the cash inflow and cash outflow over there. And the statement has the following sections in which the cash flow are shown, which occurred during the reporting period, or we can say the specific period of time. And with respect to it, there are total 3 types of activities concerned with this statement of cash flow as per the Indian Accounting Standard 7. That is operating activity, investing activity, and financing activity. With that continuation, the statement of cash flow is a part of the financial statement which provides the detail on income and outgoing cash transaction, which details net increase or decrease in cash. And such statement generate the cash which include the operations, investment, and financing. So thus we can say this statement is relating with these 3 activities, that is a cash flow statement from operating activity, cash flow statement from investing activity, and cash flow statement from financing activities. So such statement, we can say there are the basic steps for the process which lead to the preparation of such statements, like calculation of new cash balance, then calculating operating activity, then calculating investing activities, then calculating that financing activities. In that, my dear friend, the first is calculation of new cash balance. We see that a business will start and end in a year with a cash surplus or deficit. On a subtracting annual beginning and ending cash in a 1 year become the beginning balance for the next year. So we can say closing of this year, which is the opening of next year. Yes or no, my dear friends? Absolutely right. Then the idea of such statement of cash flow is to show the reduction in a cash by analyzing the cash transaction with proper planning for the particular year. So this is what that, my dear friends, that is calculation of net cash balance. Then after calculating the operating activities, to start with the net income and adding for the depreciation which was deducted as a non-cash transaction on an income statement, will get the account for with the incoming and outgoing of cash activities. So operating activities are the actions the business and undertake as the normal course of doing a business. In that, the calculating of the investing activity, and this certain investing activities like buying and selling of securities and property, plant and equipments, etc. Then calculating the financial activities, so that the many businesses opt for the loan to finance the initial cost or to buy the equipment, building, vehicle, trucks or inventories. So financial activities are involved in borrowing the cash ultimately. So these are there are the four aspects with respect to that. That is a calculation of net cash balance, calculation of that we can say that operating activities, calculation of investing activities, and calculation of financing activities. So this four are the important calculation for defining or reporting, or we can say the presenting the cash flow statement as per Indian accounting standard 7. Next is, my dear friend, there are the two methods for the showing the cash flow from the operating activities. The first is direct method, second is indirect method. Indirect method. Under this method, the cash flow from operating activities and cash outflow from operating activities are separately shown, and the cash received directly from sales is shown as a cash inflow, and cash paid to supplier for purchase and also to the employees towards the salaries are shown as a cash outflow. The difference between these two is a net cash flow. So this is ultimately the very easiest method, that is a direct method. So here just justified that particular cash flow from the operating activity as per the direct method. That cash flow from operating activities, that is cash received from customer less cash paid to supplier, cash paid to employee, cash generated from operations less income tax paid, cash flow from the extraordinary item. So thus we can define it cash flow from operating activities. Next is, my dear friend, that is an indirect method. Under indirect method, the cash flow from operating activities are not shown as a direct from sales, purchase, payment to employees, etc. But indirectly, it starts with the profit. Profit as shown in a profit and loss account arise due salary, purchase, payment to employees, etc. But the profit shown by the P&L account, that is profit and loss account, has to be adjusted for non-cash item like depreciation, return of the fictitious assets. So the actual cash inflow and outflow will be ascertained in particular manner. For that, this is the particular statement of that we can say that in an indirect method that justify that particular cash flow. With respect to that, let us understand this statement under the indirect method of a cash flow. Indirect method of that defining that operating activities. Or here in this particular statement, as per the indirect method, we are defining all these three activities with respect in this particular one statement. That is cash flow from operating activity, cash flow from investing activity, and cash flow from financing activity. And lastly, we define that calculation of net cash balance over there. So let us examine the first operating activity. Cash flow from operating activity, we start with the net profit before the extraordinary item and other adjustment and taxation. In that, add the non-cash item, that is depreciation, fictitious assets, written off, etc. And with respect to it, give the effect of change in a working capital, that is change in a current asset and current liabilities. And after that, it is ultimately defined that the cash flow from operating activity, and with respect to that, deduct that particular income tax or tax paid. So you justified that the net cash flow from operating activities. The second activity, that is a cash flow from investing activities. It is nothing but respect to your assets only. that add the sale of fixed asset, add the sale of investment, and deduct the purchase of fixed asset and purchase of investment, and also add the interest and dividend received. After that, the addition and subtraction of this particular you justified, and you get that your net cash flow from investing activities. Next is the cash flow from financing activities, that is adding that the issue of the share or debenture, loan taken, deduct the repayment of loan and interest and the dividend paid, etc. So you get that the net cash flow from the financing activities. And after adding this three net cash flow, that is net cash flow from operating activity, net cash flow from investing activity, and net cash flow from financing activity, you define that net increase or decrease in a cash or cash equivalents with respect to these three activities, that is addition of these three activities. In that, add the opening cash balance and closing cash balance. Adding that opening cash balance then is equal to that your closing. So in a particular the income statement, you have these two items, that is a opening cash balance and closing. So difference between it justified that net cash and cash equivalents over there, and that cash and cash equivalents is nothing but your inclusive, that is addition of this three net cash flow activities from operating, investing and financing. Next is some important points to keep in mind while you preparing the statement of cash flow as per the Indian Accounting Standard 7. In that, the first point is the Indian Accounting Standard 7, bank borrowings are for the most part considered as a portion of financing activities. Be that as it may, as per Indian Accounting Standard 7 requires the bank overdraft, which is repayable on the request, to be considered as a portion of cash and cash equivalents, rather than the classifying it as a cash flow from the financing activity. And Accounting Standard 3 is a noiseless on this matter. The second point, that is Indian Accounting Standard 7 required the more disclosure as compared to Accounting Standard 3. The Accounting Standard 3 uses the term reporting currency, and Indian Accounting Standard used the term functional currency instead of reporting currency. The next is that the Accounting Standard 3 does not bargain with the cash flow emerging from the foreign subsidiary. And the Indian Accounting Standard 7 bargains with the interpretation of cash flow emerging from the foreign subsidiaries. Next is a few substance by the asset, and after that provide such asset on a lease, and later on offer such assets within the ordinary course of trade. The Indian Accounting Standard 7 requires the classification of cash flow from such movement, and it's to be appeared as a cash flow from operating activity, while the Accounting Standard 3 silent in this respect, in this matter. The next point, that is Indian Accounting Standard 7 gives the few unused cases of a cash flow from financing activities, like cash installment to the proprietor to obtain and redeem entity shares, then cash receipt from mortgages, then cash installments made by the tenant for the decreases for the extraordinarily risk in a finance lease, etc. These are the quite important point for the defining that accounting standard. It's the Indian Accounting Standard 7 cash flow statement. The next point is that under Indian Accounting Standard 7, the net cash flow from operating activities utilizes the indirect strategies, or we can say the indirect strategies, is decided by the altering profit or a loss for the impact of undistributed profit of the partners and non-controlling interest as per the Accounting Standard 3 does not particularly give this the same. So there are the quite differences between these two accounting standards, that is Accounting Standard 3 and Indian Accounting Standard 7. Next is, my dear friend, the cash flow emerging as a result of an alter in ownership interest held in a subsidiary company might be classified as a cash flow from the financing activities, and in case it does not result into the loss of control. So cash flow emerging from the alter in ownership interest held in a exclusory, the company might be classified as a cash flow from investing activities. The next important point is Indian Accounting Standard 1 forbid the introduction of anything of income or expense as exceptional thing, and thus the Indian Accounting Standard 7 does not bargain with the presentation of cash flow from additional ordinary item. While as per Accounting Standard 3, the cash flow from additional ordinary items or activities might be classified as a cash flow from operating activities or investing activity or financing activities, as the case may be, and depending on the nature of such uncommon thing. So there is no exceptions has been in Indian Accounting Standard 7 with respect to its appropriateness as given in Accounting Standard 3. So the companies which are able be the required to plan a financial statement as per Indian Accounting Standard will require to get ready the statement of cash flow as per Indian Accounting Standard 7. So here there are the obligatory of Indian Accounting Standard 7 and Accounting Standard 3. So ultimately we can say that, my dear friends, all the companies who are considering who are the operating from India, they has to be complied that cash flow statement as per the Indian Accounting Standard 7. Absolutely right, my dear friends. So this is what, my dear friends, all about that, the Indian Accounting Standard 7. After reviewing or after watching this video, you have to evaluate yourself in 3 aspects. The first aspect is write a long question. Second aspect is write a short question. And third aspect is solve this multiple choice question. And after evaluating yourself, if you want to learn more on this subject, then you may refer the different books also. So let us examine the first aspect of our study, that long question. The first long question is, write a note on a steps to be taken to calculate the cash flow statement. In that, you have to evaluate these 3 activities and the 4 calculations point, that is calculation of net cash balance, then calculation of operating activities, net cash calculation from the investing activity, calculation of financing activity, etc. The second question is describe the direct and indirect method of cash flow with the suitable practical example. In that, my dear friends, you have to prepare this whole statement. The next aspect is short question. In that, defining the investing activity with the suitable example and defining the financial activities with the suitable example. Next aspect is evaluation of the multiple choice question. Let us examine the first multiple choice question, that in a cash flow statement, the item of interest is shown in which operating activity, financing activity or investing activity. So my dear friend, the interest shown in two activities, that is financing and investing. In both these activity, it is added. The next question is, the idea of statement of cash flow is to analyze the cash position, short-term cash planning, evaluate liquidity, and comparing the operating performance. So we can say that all of the above, that is A, B, C and D. So answer is D is appropriate. After evaluation with this third aspect, if you want to refer more, then you may go for this two reference books also. So hope you enjoy this video. Hope you learn well in this video. Enjoy this video. Thank you very much. We will meet in the next session. Thank you very much, my dear student. Thank you.